Recording in progress. Fuck
And we
yeah.
are live and everybody's flooding in. Good morning, everybody. Welcome to this Trend Token AMA.
Yeah.
Things are red hot in the chat today. We want this to be super interactive. So let's just start off with an emoji. Are you loving crypto, hating crypto, enjoying the all-time highs?
Enjoying the all-time highs. Fuck. Um, the important thing, should I go over the market a little bit while we're here for like 5 minutes?
I think just to warm us into it, yeah.
Yeah, all right. Let me just bring up some charts.
So whilst you're doing that, I've sent every member a message in Mighty Networks for an invite to the Trend Tokens update group. So if you're already in Mighty Networks, then just check your direct messages for an invite.
Yeah, and at some point, fairly soon, probably we're going to migrate that to Discord because crypto natives are Discord people. If they see anything other than Discord, they think it's some sort of business fucking MLM Ponzi scam thing. Um, yeah. So that's just to hold it because we really like Mighty Networks, but the rest of the world runs on this. So let's fucking zoom out, right? Who hated crypto here? Come on, be honest in the chat. Looked a bit shit, didn't it? Looked like it
Yeah.
might hold support, broke support, and then rose. Now, what I want you to see is that I wonder how I get these drawing show settings. I don't know how to work trading view. Maurizio will tell me. But anyway, around here, one of the things you look at when you're trying to gauge does a rally have legs is it fast off the lows? So you want to see a strong kickoff off the lows, and you want to see the pullback not really a pullback that's like, oh, I don't know, like this is a pullback that, oh, I don't know. But this one is like just normal profit taking after a 5% day. And then you want to see that immediately reverse. So we don't want to see a retest that goes on for 4 or 5 days and then goes, it's off. And when prices pull back, we don't want to see them pull back to here. We want to see them just go sideways, indicating that there's a bunch of cunts on the sideline waiting to jump back in. And that's the evidence that we have. And then we see a strong rally, and the sideways, we don't want to see a very significant pullback, which is what we didn't see. And then we didn't see a very significant pullback. So there's two ways that price can work off overbought momentum. One way is by a very deep pullback, like a 50% pullback or a 37% pullback or whatever. The other is just by going sideways until people get bored of it. That's what's happened here. And what are we seeing? We're not seeing one day stupid, everyone aping in all at once, which would usually be a top. Like if you look at, well, we haven't seen it here, but you would start to get a bit suspicious if we saw big days. But what we're seeing is just this steady march up. It's exactly what we want to see. I went long a couple of $1 million worth of Bitcoin a few days ago at 105, and it felt like 105 was too expensive to be buying Bitcoin. That's kind of the feeling that you want. It's like, fuck, I know 105 is a good buy. Like I bought at the open here, which was 105.50, 105.500. It was like, I know it's a good buy, but fuck, that's a lot to pay for a Bitcoin. That's kind of the feeling that you want, right? Okay, so we are all-time highs, all-time closing highs. Closing highs are more significant than regular highs. Let's look at the rest of the market. Let's look at the majors. Well, let's look at what's going up and down. Hyperliquid up the most. Fuck yeah.
Mm.
It's going to hit all-time highs. It's going to bust like a pimple. Why is Hyperliquid doing that? It's growing market share. Its open interest is very, very high in perps. They don't have much spot market share yet. They're just growing. And Binance is going down. Hyperliquid, let's have a quick look and see if there's any reason to be jumping out of Hyperliquid. So Hyperliquid was brought on by, from about here, you can see that people who staked Hyperliquid were shorting it here. We want, sorry, I'm pretty crap at drawing this. So what we want is this open interest to normalize somewhere down here. And you can see that's the start of the short squeeze. So when that gets back to about down here, we've got about $10 million. We've got about 10 million hype to do. That's about when we're going to be jumping out of that trade. So in the vault, which David didn't exactly cover himself in glory at the start, but we're running it back pretty hard. You can see the last month we've gone. And why? Because we've gone balls deep on hype, and we've doubled our money. We've gone balls deep on Bitcoin. We've gone balls deep on TRX, which I still think is good, balls deep on ETH. And we've gone short all of these launches. Marlon, I'll get to this. Chill, dog. Chill. Okay, so we're just having a quick look at the market. The thing that we really want to look at is ETH. Looks pretty good. Let's have a look at it here. What we want to see for bullish action is a general increase in volume, which we're seeing. And we want to see open interest rising with price rising, indicating people adding bullish positions. And we don't want to see it too high. So it's a little bit high. Yeah, it's a little bit high. Ethereum could be a little bit. Let's just take a quick check on Bitcoin here, see how high that is. Yeah, we're probably looking at a shakeout at some point pretty soon. Still very, very bullish, but probably a little bit of a shakeout. Okay. What else are we looking? We're shorting these fucking new listings. We shorted dude like after a day. We're waiting a day and shorting them, and it just looks like the trade of all trades. So what have we done? Dude, NXPC. You can see they're all pieces of shit, right? Launch coin, we got a bit fucked on, but it's looking good now. What else did we short? Prompt, it's about even. And the other thing that we've got is Kaito, which we were completely fucked on. We longed it here. It went down, and now it's back up. It's undergoing a very, very significant short squeeze. Okay, so that's enough of what we're doing. Let's take a quick look at FinRev positioning. Let me see if I can find it. Oh, where are we? One sec. Okay, you guys can see that.
Yeah.
These are the top 10 positions by volume on a $100,000 account, which is just makes it easy to do the math. So you can see that we're long TRX, XMR, BTC, BNB, ETC. So we're long the big shit and the dinosaur coins, and we're short ton, Phil, Algo, Tia, piece of shit, and to a lesser extent, these are insignificant. So we're short. We're probably 70% long at this stage. Uh, um, hey James, how are you, brother? Ian, can you make James Hodgers an admin?
Yep.
Okay, so I'd like to give you guys a bit of an update on TrendCoin. That's the purpose of today's thing. But I'd also like to get James completely impromptu. He's got nothing prepared, but I'd like you guys to meet him and him to talk about what he's quanting for this. So why don't we hand it over to James? Give it up for the robo James.
So just promoting James to a panelist. James will need to come out, accept that, and here he is.
By the way, James is like one of the smartest people I've ever met. One of my best friends. Trust him absolutely. He has exceptional hair game.
Like my camera's like showing me at a unflattering angle. I'm sorry I'm sorry I'm meeting strangers like this for the first time, Scott. To tell them I'm usually much more handsome.
He's renowned for his good looks and his devastating charm and his Hugh Grant-like accent.
Oh, no, thank you, man. Sorry, I in my sort of my vanity, I completely failed to listen to your introduction and what you wanted me to talk about.
Why don't you just talk about the little quanting plan that we've got? So right now we have trend, momentum, and carry on individual exchange.
Yeah.
What we're moving to with TrendCoin is a single fund setup. So that has some advantages. First of all, it's only one thing to look at instead of 1,000 things, so it's easier. It's harder for us to fuck it up. Second thing is we get much better fee tiers, and fees are infinite sharp. And the third thing is we're going to integrate it with our friend Liquidity Goblin's high frequency trading execution, which is a big fucking deal. Like,
yeah, that's the main thing that it's going to open up for us, right? The fact that currently we're doing it in individual accounts, we're on the that you guys are on the kind of lowest fee tier or whatever. If we're pooling that capital as well as having good quality execution around this stuff, that's then going to open us up to be able to do faster trading, and faster trading being higher risk reward activities that we can do that's different from what you see in your kind of trend returns at the moment. So you as sort of you guys are all FinRev customers, right, Scott?
mostly.
Mostly, right. So you'll be aware of the kind of general pattern of a trend following system where it kind of goes nowhere for ages, and then you have a big burst, and then it sort of goes nowhere for ages, and you have a big burst.
You get paid, but it sucks.
You get paid, but it sucks, right? It's a miserable experience sitting there for like 2 years going nowhere, and then you have like this big explosion, and then you sit there and it goes nowhere. So it's not much. It's not much fun. Right? You're kind of rewarded for doing something miserable. Right? what we're going to do with Trend Token, because we've got pooled capital, because we've got better quality execution, because we can build into positions over a period of time, that's going to open up faster things that we can do. That's going to open up new edges that we can exploit. So we're just going to have a lot more stuff going on, right? And when we throw a lot more stuff in the pot and stir it around, we're going to have a much more palatable kind of return stream. You know, it will be making money more often, but more steadily. And that's simply because there'll be more edges in there. There'll be more things that are going on.
And the edges that are open to us because we've got fast execution, a lot of them we actually know about now, but when we
Right.
when we try and apply them to our own current kind of mediocre execution, we go, well, that sucks. If we try and do this thing which we know is an edge, we lose money on it because we're not fast enough. We're not actually good enough. And why is that? Because unsurprisingly, attractive opportunities are also attractive to others. And it turns out that in finance, many of the other people are smarter than us and better than us, which is fucking depressing.
It is true though, right? And we're also limited by what we can do in individual customer accounts, right? Like if we can pull that capital together and trade it as one big blob, that opens up stuff, right? That opens up things that we can do.
Correct. And we're also not tripping all over each other's cocks when we try and get position.
Yeah, exactly. Because someone gets fucked, right? Like if we're executing essentially the same trades in hundreds of different customer accounts, then whoever goes first gets the best deal. So we have to sort of rotate that around. There's just a whole bunch of problems that go away with Trend Token.
So what's your plan for the order of quantity? Now, we have a friend who runs a $800 million crypto fund that he runs part of it at sharp like 5 or some stupid thing, and part of it at 2.6. And he's been very generous to us because we're both so charming and lovely. And he's told us what to do.
Yeah, so he's told us what to do because we're charming and lovely and have outrageous sex appeal. So we're just going to do what he does, basically. We're gonna shamelessly steal lots of his ideas and put them in the fund. Right? So this is none of this stuff is rocket science. This is all kind of fairly well-known things that everyone knows about. Everyone knows about trend, everyone knows about cross-sectional momentum, everyone knows about carry effects, everyone knows about intraday seasonality, intraday trend, bounces off certain points in time, like the zero UTC point. There's a whole bunch of edges that we're looking at that are not, they're not things that we've come up with because we're geniuses. These are things that we know other people are trading, and we know other people are trading profitably, and we are going to do a good enough job of modeling them, and we are going to put them into a trading system that's going to be good enough to execute this stuff and make money. And we are not going to be as good at it as our friends, right? We are not going to be getting that level of performance out of it, but we're probably getting 2/3 of the level of performance out of that stuff.
And why aren't we going to go all out super nerd, fall down a nerd hole and be as good as our friends? Because it's a very good
because you can get 80% of the way there with 20% of the effort, right? And we want to get this thing to market quick so that we can get the easy bits of the money, right? The market is getting more efficient underneath us all of the time. We want to go and get good enough solutions out to grab as many different edges as we can.
And the other part of it is that trading systems get complicated and hard to figure out what fucks up with them at a very frightening rate. You start blending 20 different things, and all of a sudden you need a team of people, and not just a team of people like Ian. You need a team of people like James, and they're all 7-figure a year guys, and then you need managers who are capable of managing 7-figure a year guys, and then and then you're looking suspiciously like a business with an overhead of $20 million a year, like a proper hedge fund, and we're better off admitting what we are. We're small time.
Yeah, I mean, like if we're honest, like crypto is a much less easy market than it used to be, but it's still a relatively easy market, right? We can still model things and trade things relatively simply and make money in a way that is like almost impossible to do at scale in traditional markets.
Okay,
So
so there's a great question in the chat. Market gets more efficient. Would that suggest that some of the edges you're looking at now will come to an end, not work anymore? Well, there's two types of games we can play. There's the risk premia harvesting games, which are risk premia, just buying and holding Bitcoin, style premia, trend, momentum, carry. Those things are likely to continue to work in the long term. Why? Because they've worked for over 100 years in TradFi markets. They're not showing any.
in every market, basically.
Yeah, the stuff that's super smart market making, um, buying liquidity cascades, liquidity provider of last resort, intraday seasonality.
Yeah. Anything they would call statistical arbitrage, basically, if you were grown up to that wore a suit would be hard, right?
Yeah. So anything that's a price inefficiency and not just taking a return for risk, like like the old story about SBF doing the Korean ARB, where it was a different price in Korea than America, which was a fake story, but still,
Yeah, I think you made that up, right? I
yeah,
don't think,
it was a fake story.
but it's a great example.
But if it was true, which it wasn't, there's no way it
Yeah,
would have lasted more than 3 months because attractive
that's right.
opportunities are attractive to others. And if that fat fucking cunt could do it, then I certainly would do it.
Yeah, exactly. Well, and the very act of trading that stuff pushes the prices together such that it doesn't exist anymore, right? If you've got some inefficiency like that and you're trading it, the direction of the trading that you need to do to exploit it essentially sort of squishes it out of the market. So,
Okay.
this
So we've
sort
got
of
another
faster stuff is less likely to last
we've got
last as
another
long.
question here. We're speeding up the FinRev, picking up edges quicker, right? That's not quite right. What we're doing is trading is right now we're trading once a day. We would still trade the same edges, but
Mm.
we would work into our positions instead of once a day and saying, okay, is it cost effective for us to move from our current position to our new position? And if so, let's do it. We would continuously work towards our ideal position,
Yeah.
which is more elegant, removes complexity, and also right now, every time we touch a trade, the rule is every time you touch a trade, you lose money. So you try and touch it as little as possible. We're moving to a model where, because we're very good high frequency traders, every time we touch our trade, we don't lose very much money at all. And in some circumstances, we might actually make money. I mean, I don't believe it until I see it. Do you reckon we'll ever make money touching a trade?
Yeah, I mean, occasionally we'll get good fills, yeah, but overall, no. Like overall, it's going to cost us to get into positions, but we're going to be a lot better at it than the performance that you see in individual FinRev accounts.
Yeah,
Um,
because Goblin does that with the sole thing. Like every time we touch a trade, we lose money. We lose money to who? We lose money to someone like fucking Goblin, and
yeah,
he hasn't had a losing week in 4.5 years.
yes. Yeah. And what we're not trying to play those kind of games. Like, when we're talking about doing sort of faster trading, it's not necessarily because we're interested in faster trading, it's because we're interested in doing more shit. Right? We're interested in like ideally, like, in an ideal world, we would diversify across as many different things as we can. We'd be trading as many tokens as we can. We'd be trading as many different kind of edges, trend, carry, whatever it is. And we'll also be trading over various different timescales, right? We'll be trading long-term trend, we'll be trading short-term trend. So it's not necessarily that we're interested in speed, we're more interested in just throwing a lot of stuff in the pot, because the more stuff that we've got that we're trading in various different ways, the lower the chance that any one of them isn't going to be working at any one point, and the higher the chance that we'll be making money on average most of the time, if that makes sense.
And of course, that comes with a cunty tail in the end. There's nothing for nothing in this life. So when we start trading small things, we need to have a risk model that says, well, you can't have 60% of your account in Dude or NXPC or some random shitcoin.
S coin or something like that.
Yeah. Because of an embarrassing situation where James and our friend Alba once found themselves. What were you? Was it green Satoshi token? You were 40%.
No, it was Celsius. Do you remember Celsius?
Oh.
So yeah, I'd phoned up my mate, and we found out that together we were 40% of the open interest on FTX, and you do not want to find yourself in that position. So then we had that kind of the Superman pointing at each other situation, where we both knew we could fuck each other if we chose to.
And no one fucked each other. You had a gentleman.
No, we were very gentlemanly about it.
Oh, what a good man he is.
Yeah.
All right. So the order of quanting for you is intraday momentum, top priority?
Yeah, so first thing, just speed up the trend models, right? So we have mostly sort of trend stuff working on a daily basis. We're going to look sort of hourly, few days, and you see some pretty strong trend effects, especially in the crappier stuff if you look at that frequency. So it's just, if we can do the execution, if we can get out of customer accounts, customer accounts commission is high. So if we can get out of the customer accounts into a pool, that plus good quality execution with our market maker partners is going to allow us to do really simple things just a bit faster. So we get some real quick wins just by being able to execute in the pool and execute with a sort of quality algorithm.
Okay, so the next thing that you're probably going to be looking at is instead of just carry, using premium as a forward-looking carry, which we can't execute well enough for now, and change in premium, right?
Yeah, so this is I guess this is kind of mean reversion in perp. So if you watch the way perps trade, for some whatever reason, someone's got a whole load of spot and they're hedging it with a perp, and the thing's gone wild, right? And they're having to liquidate their perp position very, very quickly, and you'll see that thing suddenly start trading at a massive premium or a massive discount or whatever. If you can trade fast, just fading that is a good trade. Like, it's not really a carry trade, it's just a kind of the perp's gone crazy relative to where it should be and where everything else is. So let's sort of bet on it going down. If everyone's getting squeezed out of the perp, what do you do? Well, you take the other side and you play the reversion on it.
Do you think we're going to be good enough to do any stat arb mean reversion, or is that going to be a later thing?
Yes. Yeah, I think so. Like in terms of in terms of that kind of stuff, right? We can value perps against what they are, right? A perp is, if it's Polkadot perp, we can look at the price of perps on other exchanges. We can look at the spot, and we can go, hey, look, if this has suddenly got extreme, then we can take the other side of it, and we can play those reversions, and we can lay it up somewhere else if we want to.
Okay, now let's move on. Our trend token is now currently deployed on Hyperliquid Spot, and it is currently the highest market cap spot coin outside of Hype.
That's wild. Who is buying it?
It's wild, but it's also bullshit.
Yeah, it's also bullshit. Yeah.
It's wild, but it's also bullshit, because there's only 1% of supply in the market maker, and the only market maker is HLP. And honestly, we could push this wherever we want. We could push it to $1 billion. We could draw a dick on it. We could do whatever. I don't want you guys buying it. Now,
Yeah,
I,
it is vaporware at the moment, right? No,
it's vaporware. I want you to buy a real thing with real income, with real assets. I don't want you to buy a promise that I won't come on your face, because I will. You know,
he will come in your face. That is not an idle threat. I spent
if you,
time with this man.
if you allow me to cash out vaporware for $1 billion and walk away with $1 billion fucking dollars without doing any of the extremely difficult and technically complicated work that's in front of me, the fuck you think I'm gonna do? I'm gonna take the $1 billion every time. And anyone rational is. So don't let me do it. So
Yeah,
here's
if we can take $1 billion without doing any quant work, we will do it.
yes. And I don't think that's an unreasonable position, guys. Um, um, I don't think that's a reasonable position. So here's how we're going to stop that. The trend token is deployed on the hyperliquid spot. We had a conversation about should we start market making it and doing it properly yet. We've decided not to market make the coin, and if it goes above 100 million in market cap, which it will periodically, we're going to sell that and use the money to fund the company. Before we market make it, we need to have a proper Discord, Twitter, website. We need to have a community on Twitter. We need to have fucking memes that are actually funny and blah, blah, blah. And the rationale here is that I want to take you, the users, on a wealth creation journey. It's no good if I launch the coin at $1 billion market cap and it goes to 1.5 temporarily and then crashes back to 100 million. That's just a terrible idea. It's terrible for everyone. It's just it's bad karma. It's a shit thing to do. We want to start it at $100 million and then run it up to multiple billions. We want to take everyone, including James and I, and Ian, and Caroline, and and Maurizio, and Paul Clark, and every last every man jack of you, and the ladies, especially the ladies, on a wealth creation journey, like a life-changing wealth creation journey. And the way that we can do that is by starting off very reasonable. I want people saying, wow, $100 million for Trend, that seems like a pretty fucking good deal. As ludicrous as that sounds.
Yeah. And then we all want that thing much, much higher. We all want to get filthy crypto rich off that token.
Yeah, the idea is that we align our interests. So there's no way out for James and I that doesn't go through the door that all you motherfuckers get rich. If we align ourselves that way, if we align the incentives that way, that there's no way I can dump on you, that there's no way I can even get remotely rich without making all of you rich, then I think we're in much better shape than if you guys always have to worry about a prisoner's dilemma situation where you have to dump ahead of me. Because that's no fun. And this is going to be hella fun.
It's going to be number go up technology for the benefit of all, isn't it, Scott?
Yes, I'm calling it number go up tokenomics, and let's get into that. So our season one airdrop is 32% of supply. Our hyperliquid did 31% of supply. It was the most generous airdrop in history. We're doing 32% because fuck you. Our investor feedback, we've spoken to a number of VCs and very influential whales. They tell us that having no more than 50% of supply going to the team and investors is ideal. More than that, they're going to be suspicious and they're not going to want to buy in until the team and the investors dump out because there's always overhanging supply. Our investors being able to stake their coins is a big deal for them. Now, in the past, this has been a disaster for some coins like Bera, like Aptos. Can you think of any others, James? But those are the two that come to mind.
No.
Yeah. For Solana as well, actually. Because what happened is the investors staked their own coins while this thing was being built. And then by the time the thing was built, they had a pile of coins from staking, but those coins weren't unlocked like their investor coins, and they could just sell them straight away. And so we don't want that situation, but it's not going to be a big deal for us because our rewards are paid in USDC. So it's no big deal if an investor gets paid USDC and the vault is earning USDC. It's not a big deal. Now, the next thing we need to talk about is what yields are attractive to DeFi in the market. And so our feedback is that for a DeFi vault, valued in a coin like Trend Coin, paid in Trend Coin, has to be 15% as a bare minimum. We'd like 20%. To be paid in USDC, it has to be attractive, at least as good as the Wildcat Finance market maker deals. So it has to be better than let's have a look. It has to be better than Wintermute at 12%. So we'd probably like to pay our investors of the order of 15% in USDC. We can pay them a lot more. We can set these vaults up so that they pay 50 or 60%, but they're just going to have higher drawdowns. So we just choose a high volatility target. They pay more, but they have more drawdowns. We've got to decide what we want to do. Obviously, the smart thing to do is to come out of the gate with a very, very high APY just to attract capital, and capital is sticky. Is there any comments on that in the chat? So ideally, I'd like to see it paying at least 50%. No, there's no minimum, dude, like a $10 minimum or some shit. Simon, there's got to be a sweet spot somewhere. So the Trend coin is getting 20% of the profits of the fund. If the fund is $50 million earning 50% a year, that's $25 million and we get 20% of that. That's not that much split between Trend token. If the fund is $1 billion earning 20%, that's actually a shitload more for the Trend token holders. Marlin, Anchor Protocol was a big success at 20%. It was a Ponzi, but yeah, I think that's kind of the thing that we're looking at. We're looking at an anchor type yield with real yield. Okay, so some ideas that we're noodling on. We're meeting in Brisbane this weekend. Should we have a fund for buybacks in crashes if we overwhelm available liquidity and Trend is cheap? Should we buy it back? Should we have a degen vault? So if we have a normal vault that's steady and smooth as she goes with a lot of mixed stuff, should we have you can trade straight Trend at a much higher volatility target than you can trade a mix of other edges. Why? Because returns are auto-correlated. Hi, Ma, how are you? I'm just on a call at the moment, but I'll be back at 6 a.m. on Sunday morning. So I'll get a taxi to your place then. Okay, I'll give you a call back. Boomers. Should we have two vaults? A degen vault running at some ungodly target. It's quite difficult to blow up a straight Trend vault, even at stupid vol. It's very easy to blow up a mixed edges vault at even above 50% vol. Your guys' thoughts on that? In the chat, please.
Yeah, I guess it's one of those things where you just can't have your cake and eat it, right? Like it would obviously what you want to do is find stuff that makes money and then dial it up as much as possible. But the kind of return streams that make money most of the time are also the kind of return streams that tend to lose quite a lot of money quite quickly. And you just can't have both of those things, right? You know, if you dial up something that is relatively high performing, making money most of the time, those positions tend to be crowded at the worst possible time, and you tend to make quite a lot or lose quite a lot of money quite quickly in adverse market conditions, which is not a problem if you're operating at, say, 20, 30, 40 vol, probably, but it almost certainly would be if you were operating above that. So it's it's one of those things, you're just dealing with trade-offs all the time in trading, and you've got to decide what it is that you actually value and you actually want.
The shitty story of trading is you can't have your cake and eat it too, and it sucks. So James, do you want to have a quick look at the chat there? It's overwhelmingly we love DGen.
Oh yeah, I know. I mean, I'm sure. So I guess the trade-off is if you want to be running hot, then we need to do stuff that isn't likely to crash, right? So the return profile for something that was a degenerate vault which ran at a very high level of volatility would probably look a bit more like what FinRev looks like at the moment, what your existing trend following profile looks like. Because like Scott says, it is hard to blow up something like that. It's hard to blow up what we call sort of a positively skewed strategy where we have regular small losses and irregular large wins. It's much harder that we can wreck ourselves in something that looks like that. But if we're talking about something that looks more like the base models that are going to go into the trend system, that almost looks like the other way around, where you're making money most of the time, but then occasionally we're going to sharply lose a bit of money in adverse conditions. So if we were doing that sort of degenerate vault and that other one, we would probably have different stuff being traded in those two vaults. Does that make sense? So we probably have stuff that looks more like your existing trend following stuff in the degenerate one, and other stuff in the low. And we should probably not call it a degenerate vault, depending on who we're trying to attract.
I was gonna call it a retard vault. I got voted down.
I know you wanted to call it a retard vault, yeah.
So what sort of a Sharpe ratio with decent execution do you reckon we could low end estimate on a DGen vault?
Low end 1.
Low end 1?
Yeah.
So that would be annual volatility of, say, 70, annual drift of 70.
Yeah.
And let's pick a low.
Because of course, the more you pump it up, the more everything starts working against you. You unfortunately in trading you can't just turn things up and get the same performance. As you increase the size of it, you are just decreasing your risk-adjusted returns every single time you do that.
Well,
which is a shame. Like, we would all love that to not be true, but unfortunately it fucking is, right? And we don't have a choice over that.
Unsurprisingly, taking more risk turns out to be risky.
Yeah, who knew, right?
Who knew? Why didn't someone fucking tell me? Can't. All right, so this is a Sharpe 1 running at 70%. We have 10 simulations. This is the best of them, starting with $10,000. You're at 1.5 million in 3 years, with 54, 89, and 81% drawdowns. If that same thing is a Sharpe 1.5, it starts to look a little bit better. So you've got 425% in the best case, 172% average, and 76% in the worst case. But you're still dealing with high 50s to 60% drawdowns and long cunty drawdowns. So the degen vault is a nothing for nothing type situation.
Yeah, it's got to be clear that that's a moonshot vault, right? It will have positive expectation, but it's quite likely that you could go years and not make money in it. Like, it's also quite likely that you could make a lot of money in it.
I can show you a 100-volt vault if you like. You want to see it?
We can still see your GBM simulator thing, by the way, if you're trying to.
Don't worry about it. I'll send you guys some things later. We're going to get off track here anyway. So anyways,
I guess the only point is we know there's demand for higher volatility vault, right? I think we will do our best to meet that, but just be clear about what all the trade-offs are associated with it.
so I think our regular trend, we can count with HFT execution on a sharp 2, right?
Yes, if we're doing it at sensible size, or we're doing it in pools with our partners doing the execution, yes, I think so.
Okay, so this is the best of 10. $10,000 to $1 million in 3 years, 400K in 3 years, and 180, 190 in 3 years. Best of 149%, 112%, 75%, with drawdowns around the 30%, 30 to 35%. Can you guys handle that at 40% vol?
Are we going to call them pussies if they can't? Everyone say yes. Certainly. The way he's posed that question made it quite likely that we'd get that answer.
Labrador.
Definitely. Cool. So you guys would accept some welly in this thing.
Many pieces of paper as you want. This is my.
That's good. That's good to know.
So what do you call?
Hey, nice to see you.
Oh, what a beautiful eye she has. Your hair look very nice today. Well, you sleep okay?
No.
You having fun with your dashy dog? Yeah. All right, go get your paper.
She's gorgeous.
Yeah. Lucky she takes after her mother.
I know, right?
Right. Okay, so I mean, the truth
I wasn't
is,
going to say she looks like you, mate.
dude, I look like a gorilla taking human form. I've got a face for radio. So the truth is, the promises about returns aren't promises. Like, we're just bullshitting there. Like there's a huge range, because why? We're taking risk, and taking risk is risky. Like, if you don't like taking risk, this isn't for you. Okay, so open questions. Do we have a degen vault? Everyone seems to say yes, right?
Yeah, that was unanimous. Yeah.
Unanimous. Do we pay a commission for people, and a referral fee for people introducing their mates to the vault? In the chat. JP Cuckarts makes a really interesting point. It hits very different when you're losing a casino's money than losing your own off the gate.
Yeah.
Okay, we've got a mixed result there. We've got why not, too complicated. Okay, let's further discussion. Okay, so where are we at right now? Existing API access is ready to go on Hyperliquid. It's trading on my money. To be eligible, we're going to have to switch it to a HL Vault, which is a non-trivial thing. Why? Because it's a great, if you put all your money in one pot, it becomes a great big honeypot for hackers. And we've got to make it damn sure that we don't get fucked. Got a plan for that. The dilemma, if we keep the vault small, existing customers get more of the airdrop. Don't forget, we're dropping $31 million worth of coins to the people who open up FinRev vaults with us, all you guys. You're getting $31 million. If we spread that far and wide and we go and tell the world, come in, and we get $1 billion, then we're splitting $32 million within $1 billion of our closest friends. But if we do it right now with like $50 million, you guys are going to get a lot. I don't know. James, what do you reckon? Do we keep the vault small and high vol at the start until we work out capacity? What do we do?
It's hard, right? Because we above everything else, we want to make money. Then it's our number one.
No, dude, I'm in it for
objective
the
here.
fucking tech.
You know,
I'm in it for the tech.
This is not your vaporware shitty meme coin, right? This is a legitimate trading project, and the main thing that we have going on here is a set of models that we want to perform well, and we want to be seen to be performing well. So I think probably the best thing that we need, or the most important thing, one of the most important things we need to do is just show good performance in the trading right from the off, if possible. So I understand the arguments, but I would be sort of reticent to turn it up real hot straight out of the gate, just simply because trading performance will be worse if we did.
So what James was getting at is it's not easy, but it's much easier to make money with $50 million than $50 billion. See Warren Buffett.
Yeah. And, the worst thing that can happen is we get really unlucky at the start and lose a bunch of money, right? Which can happen. And if that happens when we're trading relatively small, it's much of a it's bad, but it's nowhere near as bad as if that happens if we'd really turned it up to the max to get some to sort of maximize early profit for ourselves, right?
So where would you stick that line in the sand? Would you stick it at 40, 50, 60, 80, 100 million?
I'm not sure. We'll have to think about it. We'll have to
Want it.
Yeah, we'll have to run some simulations and have a think about it. But yeah, I think from what I'm seeing in the chat, I think people are agreeing that, when you're starting something new, it's best to be cautious about it, right? It's best because you will have a bunch of problems that we're not anticipating that will appear. And it's best to work all of that stuff out when we're not dealing with potentially a really nasty chart.
Okay. Team vesting. One of the obvious problems with people starting crypto coins is that at the moment they're telling you all to buy them, they're dumping them on the other side. We want to avoid that, and and because you guys can't and really shouldn't trust a guy like me. After all, I've been to jail. And I like money, and I'm unashamedly trying to make generational wealth for my family and James's family and Ian's family and Caroline's family. And you shouldn't allow a situation where I can dump on you guys. So I've got some suggestions on how to stop me fucking you over, and I want some feedback on them. So the first of all is we can do vesting on the normal team vesting is 6-month cliff, 2-year vest. So for the first 6 months, they get nothing. They get all 6 months in one go, and then they trickle out over the next 2 years. That kind of incentivizes shit behavior.
Mm-hmm.
We can do investing based on AUM, vesting based on AUM. which ultimately benefits the trend holders because more AUM is more money, even if it's at a lower return. We can do vesting based on Sharpe ratio of the vault, so that if we jack it up to a $5 billion fund earning 10%, well, we don't get vested because the vault users aren't getting paid enough. So my idea is some combination of those two. What do you guys think about that? Is there any other left field ideas? Is there any other ideas you've heard of? Basically, what I'm trying to do in plain English is make it so that the door over there that's marked Scott gets rich and retires has to go through the room where every one of you gets rich too. And first, you have to get rich first if I'm going to get rich. Vesting based on Stronghold has an idea based on price levels and roadmap achievements. I'm not such a fan of price levels because it's quite easy to pump and dump a token. And I don't want a situation where I can employ a bunch of scammy market makers and just run the price up and dump on you guys. James, what do you think?
Yeah, I mean, price is the easiest thing for bad actors to manipulate. I think if like I wouldn't want to be in something where the team could run it up to a certain level and then sell it, right? You know, because there are many scammy parties out there that will do that kind of thing. We want to make sure that this stuff is stuff that is tied to what we're actually trying to achieve as a project, which is mostly collecting assets and having good trading performance, right? This is essentially a trading fund. Like the real thing that we do is trading. We should tie this stuff to the trading performance and our abilities to market it and attract assets and make money for you guys.
Good question in the chat. Will Trend be airdropped and put in Vault? Trend and the Vault are two different things. So you put money in the Vault, you get an instant mint of TLP token, which is Trend Liquidity Provider Token. That is tradable on the market, but it just goes up as the value of the assets in the Vault fund. What coins to put in the Vault? That is a very good question. We've got to do some quanting on universes here, and I think since we're on Hyperliquid, it's likely that we'll be able to have more edge on Hyperliquid. We should definitely be directionally trading Hype, I think.
Yeah, I think so. There's a bunch of stuff we know that we can use to trade Hype directionally.
Yeah. Okay, now we have a sales team right now. Some of you have interacted with it. They're very good. They're world class. We can potentially, sell to retail direct, but that's in direct violation of SEC laws unless we're registered. So we've got to investigate whether or not that's legal and how we make it legal. Our venue for incorporation is a crypto venue, crypto-friendly legislation country called the Caymans. We'll incorporate a hedge fund there. The Trend Protocol, this is a test bed for having other funds come online using our infrastructure, which is good. Our dashboards, our smart contracts, our onboarding, our offboarding ramps, all that stuff. We would like to allow other companies to put their trend funds on chain, to put their any type of fund on chain and charge them a nominal fee, but we would like to charge them in trend token. If they have to buy trend token, then the number has to go up. That's the idea. Marketing trend to the wrong crowd could definitely be detrimental. If you have a bunch of scammy people and it looks like a scam, or a bunch of people who are influencers who paid, Like we've all seen projects die because they've got fucking assholes pimping them. Okay, so here's some stuff we can do in the vault that we can't do right now. So right now we can only trade perps, but in the new vault we can hold spot, we can hold the hyper liquidity provider, we can hold any other liquidity pool. If those liquidity pools seem like they're good value, we can hold them. We can do basis trades, as in buy spot, short the futures, or borrow spot, long the futures. James, are those likely to be things that we're going to want to do?
Yes. Yes, those are simple, good ideas and things that we would want to do for sure. Like I said, we're just trying to find a bunch of stuff that makes money and smash it all together.
Cross exchange arb, bit harder, but are we
harder? Probably not. Certainly not
Yeah.
out of the gate. Like maybe in the future.
Yeah. Are we going to market make our own coin trend?
Potentially. I don't know, right? Because we've got partners that are doing that.
Yeah, and we don't really want to fuck over
I
it.
don't know. I don't think so. I think that's sort of a bit of a conflict of interest. I think.
Yeah.
Yeah.
Do we want
I'm
to?
not actually sure we'd be very good at it either.
Yeah. Do we want a basis trade trend?
Yes, probably. Probably we will. I mean, we have a good idea, I think, of the people who are holding the token. I think we would be in a good position to do trades if anything got out of whack.
Should we pendle up, as in lock in the interest rates on our vault when they're higher?
I think that can be a good trade. Yeah, I guess it's just depend like yeah, so we need to think about kind of buying power and stuff. That's good. That's a good trade if we don't have anything that we're confident that we can get a similar level of yield
So
with.
my
But
buddy Lee Drogon from Starkiller Capital, who Corey's trend fund. Their strategy is pretty simple. They use a simple moving average crossover to buy the large cryptos, and when it crosses over negative, they pendle up.
yeah, that makes sense.
And the pendle up side of it has a sharp 5.
Yeah, I'm sure it does, right? That's just a simple yield play. Yeah, I think so. So we need to look at how we're using capital, but certainly when we're running trend models, it makes sense if we're essentially low on absolute exposure. It would make sense to do that. It would make sense to lock in yield for a while.
And should we be doing the hyperliquidity provider with excess capital?
I think it's a good trade. Like, I mean, what you always like when you're looking at sort of trading as a problem, you always want something that you're relatively certain is going to make money over the long run, right? And if you look at HLP, if you look at the return stream from that, they're buying a whole bunch of liquidations on hyperliquid, and it makes money very, very reliably. Now, I'm sure there's a bunch of tail risk in there, but throwing in stuff like that, even if we can't get very high returns from it, are useful because they give us a high confidence bid in the portfolio as a whole. Right. So,
They also
was
make the most money in crashes. And it's a nice, this is not applicable because it's before they added liquidations, but this is a nice equity curve. This is a sharp 2.8 equity curve at a low vol. You can also
beautiful. It's just low volatility, right? So we won't want too much of it, but having it there is just going to provide a nice sort of make money most days kind of bid if we've just got a bit of it in that.
Would you loop that?
Yeah, probably.
Okay. Looping means borrowing to do that. Okay, good question. How is the payout setup? Here's the way it works. You own, sorry, I have a playing keyboard. You own trend liquidity provider, which is the vault. You can redeem. You can redeem by to be eligible for rewards. You have to stake it. Takes 2 weeks to unstake it. Why? To avoid people doing like a hyperliquid exploit where they buy $50 million worth of the stuff that we're going to have to buy if they put $50 million into the TLP and then trick us into buying their shit. So we need to have a 2-week unstake. But if you want your money instantly, we trade TLP USDC on an AMM on DeFi. So if you want to pay a market maker, you can get out instantly. Yeah. So that's the way the TLP works. Trend. Okay, your rewards come in USDC or Trend if you get to choose. So if you want to compound up your returns in if you want to compound your returns in TLP, that's fine. If you want to just leave them, if you want to leave them in there and have the TLP price go up, that's fine too. The trend, when you stake it, you're eligible for rewards. The rewards are 20% of the profits of the TLP. And those are swept out how often, James?
We haven't decided. Probably fairly regularly, probably daily, I would think. Basically, it doesn't really matter. Like whatever we think is the issues are around mostly sort of technical around people potentially front running obvious things and stuff like that, right? Rather than the
because we're doing things that everyone kind of knows and understands. So
yes.
So are there any fees? Yes, there are fees. There are fees on the TLP, but those fees go to the holders of Trend token who have staked. Now, not all Trend token holders will stake. Some will hold on exchange. So if 30% of holders stake, they share the whole pie. Shine it, MD. Yes, you should. You don't have to, but you should fund the vault with that. Why? Because the airdrop is going to be overly generous. You are going to get a large airdrop. Now, shall we talk about the airdrop?
Let's talk about the airdrop.
Okay, so the airdrop works in 2 ways. On depositing, on opening a balance with Vault and being an existing InRev customer, you get 6,000 points if you paid 6K, 9,500 points if you paid 9.5K, etc. Each week, you get points for the percentage of the vault you have. You have 100K, vault is 10 million. You get 1% of the points. Everyone with me so far? Before, well, the day before token generation event, where all these token generation event is where points get converted to money, we make an adjustment to 1 points because we don't know right until the very end. Is 6,000 points going to be worth $1,000, $10,000, $20,000? Is it going to be worth $500? So we're going to give you extra points so that existing FinRev customers get the exact same dollar value back that they spent with us, plus extra dollars for contributing their share of the vault. The idea here is that you guys, we're giving away 32 million bucks here. I want you guys to get as much of it as fucking possible. Why? Because I'm one of you guys in this. I've got my own money in the vault. I want as much of it as possible. And there's no special rules. There's no special bullshit. There's no favoritism. There's no like the team gets to game the airdrop. Mike, if I bump from 6K now to 9K now, no, you don't need to pay anything again. That's the last money you ever pay. In fact, we're paying you. You'll get your 9K back. You're all getting. You have to buy some. Okay, Marlon, some of us may not be able to buy TLP until after the airdrop. Buy $100 worth. That buy $10 worth. That's enough. Does this mean FinRev will be wound up over time? No, it does not, but it's going to be better performing. You want to be part of the airdrop. It's going to be a much better deal for you if you're in the vault. Once this happens, you don't need to pay every year for FinRev. Once this happens, you're going straight to the 20% deal, and we're giving you your money back on the day. You can be in the vault and FinRev at the same time, yes, but I strongly suggest that the vault is going to be a better deal than FinRev, and we're giving you all the money you spent on FinRev back. Questions, guys? Questions, comments, concerns? It's also a lot easier technically wise than the current level of bullshit, which even I found confusing, to be honest. So it's going to be like, what's the fee structure for the vault? 20% of the profits plus 2% of the AUM. 2% of the AUM goes to Real Trading Research, the company to keep the lights on, to run the servers and the infrastructure and pay James and people like him and Ian, and the rest of the money is 20% of the profits. Is the airdrop matched the amount we deposit into the vault? Yes, it is. We paid less, but have been here the longest. That's a very fucking good question. Yeah, I think we can sort out a yearly bonus, an OG bonus. I think that sounds perfectly fucking reasonable. If you guys are concerned that we're going to be charging you more under the new system than the old system, you can game it. So you can put just $100 in the new system, in the new vault, and keep your old deal until it runs out and then transfer over. You're perfectly willing to do that. If you think it's going to be a better deal for you, this is not about taking some people and putting them on a worse deal. This is about giving everyone a better deal. The other vault has nothing to do with anything. Yeah, the OG bonus I think is pretty fair. FINREV Platinum is the same strategy as the Vault, but the Vault has better execution. It has high frequency trading execution. No, whether or not you're in profit or loss is irrelevant to trading decisions. That's a real amateur move to think about that. All your decisions, like in life, are forward looking. You know, I got out of jail once. I would have really liked to have gone back in time and not gone to jail, but that really wasn't open to me. What I had to do was make the best decisions I could, being broke and ex-con. And you'll find that with trading. You have to make the best decisions you have going forward. The HL Vault opens up some edges that we can't monetize now with high frequency trading. Yeah, there's no penalty, dude. Yes, everyone's going to get help. Ian, you've got a shit job ahead of you, son. The meme coin vault is finally restoring some fucking pride. I have to apologize to you guys about that. Our trader there had done incredibly well in our incredibly well trading OX exchange, and he just kind of screwed the pooch when he got on Hyperliquid at the start until we had to like explain some basic facts of life to him. And now he's on track.
Nice. Hey, Scott, just a little bit around language. So the vault that you're talking about is completely different from the main coin millionaire vault. So what's on screen now is the main
Oh,
coin.
yeah. This is the meme coin millionaire.
If people want to take their money out of this vault, there is a 10% fee. So this is
No,
not
there's a 10% of profits.
yeah, but this is not the vault that you're talking about. People are getting
No,
a big
no. And this is a vault built in Hyperliquid. Now, snappy answers to stupid questions. Why don't we just do a vault on Hyperliquid? Well, we can't do spot on these vaults. We can only charge profits when people withdraw, and people only withdraw when they've lost money. There's a bunch of stuff we can't do in this. It's not a very good business model for it. Yeah, but I'm going to run this fucking thing up pretty hard. I was fucking personally embarrassed at the returns, and I'm doing something about it. I mean, I'm taking some fairly unreasonably stupid risks right here, as you can see. Like, you can't make 820% in a month without taking stupid risks. I'm like, I'm ape man here. Yeah, you can deposit in the meme coin vault. It's had a good run. Wait for a drawdown, dude. Like it's up fucking 820% a month. You don't buy anything that's up 820% a month. That's insane. I don't have targets because targets are stupid, man. The market doesn't know what your price you paid or what price it's going to get to, and support and resistance You might think those are real because a bunch of people on the internet tell you they're real, but I assure you they're not. And if they are, they're very, very minor effects.
Nice. Scott, is what you've said today scribed in stone? This is the law. It will not change ever.
No, fuck no. Don't hold me to any of this. I'm a famous bullshitter. This is the plan as it stands. We are all meeting in Brisbane. Got to get on a plane. You got to get on a plane, James. And after that, it'll be set in stone. It's set in stone when the white paper comes out. So, you know, we're probably a month from setting it in stone.
So we've got a group that are meeting in Brisbane tomorrow, right? And you know, Scott and I are the retards of this group, and we have a bunch of autists and grown-ups and boomers and like project people, and we're all going to get together and set this stuff in stone.
Yeah, and fuck me, the autists are really fucking smart.
Yeah,
right?
we've got good autists. We've got good quality autists now.
Yeah.
Most of our meetings are just us asking them how to do things.
Yeah, the other day it was just like all these things that I lay awake at night thinking about. The autists just answered just like bam, bam, bam.
Yeah.
Right, guys, I reckon that's about it. Oh, by the way, fucking the best way to get involved in this is to get FinRev. So, Ian, can you post up a link for something about FinRev and a link to book the call? The best by far way to get involved in this, the best way to maximize your airdrop is to get involved in FinRev. It's not going to cost you a cent because whatever they charge you, you're going to get back, and you're going to get the airdrop on top of, you're going to get the airdrop for whatever you paid, and you're going to get the airdrop for switching your coins over. And you can't do that unless you're a FinRev customer. So what I want to make it do is I want to give the FinRev customers a free kick. You're going to get first snatch at it. You're going to get it in beta before we release it to the world. Yeah. You know, this is
and it's a good quality trend following system with some other bits attached. Right? So you're getting most of the trading models that are going to go into the, or you know, 50% at least of the trading models that are going to go into the trend system.
Yeah, and unlike these hoes, I'm loyal. Like I didn't take any VC money because you motherfuckers kept buying my shit. So now it's time for you guys to get paid. You'd be nuts. You'd be nuts not to actually take that.
Yeah.
All right, guys. I reckon that's about it. Ian, anything else?
No, that's absolutely awesome. There'll be a replay. Thank you, everybody, and I'll speak to you all soon.
Let's all get disgustingly rich. It was very nice to meet you all.
I feel like other people are stupider than us and richer than us, and it's just unacceptable.
Yeah, we need to sort that out with our number go up technology for the benefit of the people, Scott.
Yeah, our number go up tokenomics is very strong.
Yeah. Thanks. That pleased to be in this with you all. I think we're gonna do a good job.
Yeah, we're gonna crush it. See ya.
See ya.
Ta-da.